Hello everyone, hope you're doing all right. Today, a trade recap with, of course, the psychology review as always. So, I said on Monday, I believe, or Tuesday evening, I said I'm mainly focusing on Thursday and Friday this week. So that's where my focus is. This was because of the economic calendar. And I didn't like Monday. I didn't really like Tuesday. I did say, all right, if something clean presents on Tuesday, I will likely take it. But I trade London, and there was nothing clean in London for me, so I avoided it. And then Wednesday, obviously, CPI and FOMC, so I wanted to avoid it at all costs, just because the probabilities are not in my favor. I know this through data, etc., through experience. I just don't like these type of days to trade on them, and there are going to be better days. For example, today. Today was a better day in London, at least. It was a better day. It wasn't necessarily that clean, but it was a better day. And the probabilities were in my favor, and that's very important for me and for my capital. So we are rejecting these highs, which I don't like. We talked about this fair value gap and how we likely expected the price to go higher right here because we were rejecting off of it. Same thing we talked about earlier. We were rejecting. We are struggling to go higher. I don't like this. I don't like that we are struggling to go higher. Now we do have a very clean fair value gap right here on top of the breaker, which I do like. So we could see some sort of retracement, especially if we do take a look at the dollar. Dollar is now heading for these lows. This low right here that we've been calling out for ages. This drawn liquidity was pretty clear. If dollar reaches this low, the next thing it could do, because now you're basically in sort of a no man's land. You're in the middle of nowhere, and that's a scary thing to be in. I don't really like that, to be honest, because it's a bit, you're a bit in the nowhere. I don't like it. I just don't like it. Well, the next thing we could reach for is this low, but this is a bit far before we see any retracement. I do like this fair value gap right here with this order block also then overlapping with the breaker right here. So I do like this area right here. And from there, possibly higher prices or whatever, or we'll just react accordingly. If we do close below right here and we close below this low, I want to see this low hold as a support. Ideally, we close below with a fair value gap in the middle. Then the next day or day after or next week. So if we do close with fair value gap maybe tomorrow lower, or if Tuesday or if Thursday, sorry, if Thursday, so today, wants to close below it and cap off the week, Monday made a high. If Thursday wants to cap the week, it will likely sweep this low. Now we did already sweep the low on the futures contract. Yeah, let me take a look. We did already sweep the low here on the futures contract, which I don't like because, as you know, this is a CFD. So CFD, they make up their own data, and this is the real data essentially, because this is the futures. This is what the CME, Chicago Trade Board, etc. uses. This is the real data. This is raw. This is like ES, NQ, the futures contract. It's the same for this. They did take the low right here. Now, again, same story. If we do close with this fair value gap right here, and Friday closes as well, and Monday or Tuesday next week, we could see some sort of retracement into this low with the fair value gap, overlapping fair value gap, and then see another displacement lower. That would be ideal. So keep your eye out on that. That would be nice. Where was I? I was on the DAX trade. Yeah, got distracted. But at least my point is dollar bearish. Drawn liquidity was always bearish, still bearish. Nothing has changed. Even when we do sweep this low and we do get some mark structure shift on the 15-minute, then I'm not suddenly going to switch bullish. I'm still bearish. I'm not trying to call any bottom. not when we don't even have a higher time frame market structure shift 4-hour daily. I want to see some sort of market structure shift bullish before I start to be bullish again on the dollar. And of course, if we do sweep this and don't close below it, that will also indicate a lot. So DAX, this is the wrong one. This is the, no, I was right here. I'm sorry. This was the one. Yeah, this was the one. DAX right here. Yeah, so we are struggling. And the point of the story, the moral of the story, if we do sweep this low right here and we reject away, then the next thing you can expect, DAX and ES, you can expect a hefty drop, because the dollar is now moving lower with ease, and ES and DAX are struggling to move higher, which indicates they are sort of, see it as they are held back. And when they are held back like this, if dollar sweeps it, so doesn't close below or anything, then you might see DAX and ES drop off heavy because they are struggling to go higher. So yeah, that's something to keep an eye on. Again, doesn't mean you should short right here and look for shorts or longs on dollar, because like I said, I'm still bearish on dollar, but if that happens, it's something to take into account, and then we could possibly on DAX drop lower into this weekly fair value gap. All right. Now let's get to the actual trade. But this process of thinking is very important, because this is my higher time frame analysis. So now my psychology was ticked off my higher time frame analysis. Let's do it again. Psychology was ticked off. Let's make it a little bit smaller. Binary again. 1 checked off. 2 higher time frame analyst phase analysis, analyst, whatever you want to call it, checked off. Now the only thing left for me to do is execution. I'll get to where I entered on into a minute here, but psychology for me was actually a little bit tough today. I don't know why, but I struggled today with my psychology. I didn't struggle, but I just noticed myself not being on my A game. I was a little bit tired. I didn't sleep that well, so that might have been the main factor behind it. But my psychology was not in my A game, I believe. I didn't do anything stupid or anything out of order, but I just noticed my mind was just not completely there. And that's okay, and I acknowledged it, and I still made money in the end of the day. But that's something for me to journal, and now it's important for me to journal this on pen and paper. So if you have the same thing, then please do this as well. Now it's important for me to journal on pen and paper at the end of the day, and then get everything out of my head, get everything out, because if I do want to trade tomorrow, I want to be in my I want to be in my A game. I'm sorry, you can probably tell I'm a bit fried, I'm a bit tired. Might have been the lack of sleep, but yeah, I'm not in my A game right now. That's what I believe. I believe my psychology this morning was not in my A game, and that's something I acknowledged, and I need to journal it. I need to review it, and tomorrow, hopefully, when I do wake up and I do notice I'm not in my A game, I will just stop the week, especially since I'm in profit. So I will likely be very, very careful, and I will adjust my risk, because I don't want to lose my profit going in the end of the week, because I think next week we'll have a beautiful week ahead of ourselves with the news, etc. So that could be a beautiful week. So I don't want to end this week where I lose money. So again, if I do decide to trade tomorrow, then it will be less risk, and I will be very careful, and I will demand a lot of price action. I will want to see very specific things, and that's what we are getting into right here as well. So the only thing I really saw, and this is I did struggle a little bit here, because the only thing I saw was this previous day low and this volume imbalance. On the 4-hour, I saw nothing clear. I only saw this fair value gap, but I thought, well, price is likely not going to retrace that far down. and then push higher, especially now if the dollar is bearish and we are expecting lower prices here on the dollar right away. Then for price to come all the way back down here and then push higher, very unlikely. So I saw the previous day low. Let me make this visible. I saw this previous day low, which was on the 15-minute, because previous day low for me is a daily PD array, a daily discount array. So I use the 15-minute to enter. So we had some equal lows. Now all this is irrelevant to me on the 15-minute. It's nice that it's there, it's an extra confluence, but it's all irrelevant. The only thing I need to see is my entry pattern right here. That's the only thing I want to see. So again, we came here. This was Asia or whatever. This was late in the day yesterday. So that's something I do not necessarily like. But again, this happens. If Asia is just an expansion, then London might be a retracement and will move higher. So it's not that bad. But of course, if this happened in a kill zone, it would have been even better. We had this mark structure shift. We had this breaker right here. We already had our ST right here. We had here some sort of fair value gap. Then here volume imbalance. Also here overlapping fair value gaps. Perfect. All right, we are pushing higher right here. Now it was at this point right here that I sent out my analysis in the Discord, and I demanded a lot of price action because I was not that sure. I didn't really like this previous day low sweep and not coming into a clear discount array. That's what I like. That's what I don't like about it. I like a previous day low sweep if it's coming into a clear discount array. So if this was into a clear fair value gap, then that's okay. That's perfectly fine. Then it was very clean. Now we did sweep into a volume imbalance on the daily. Of course, this is also seen as a fair value gap, etc. Also discount array. But in my opinion, a fair value gap is just way cleaner, and a volume imbalance might just be an indication of consolidation, etc., of just messy price action in general. So I demanded a lot of price. I saw this breaker right here, and I saw we were pushing lower right now ahead of London. So that's nice. I like this push lower. We had this fair value gap right here. We have this breaker. If we wanted to push higher, I wanted to see this. I wanted to see something like this and then push higher. And then my target was this, these equal highs. Now, I can sit here and tell you, I knew exactly it was going to trade here, right here and then stop and then break down. No, I didn't. But the main thought process behind this is why I did target the equal highs was because we were rejecting a lot. Like we just went over on the daily, we were rejecting a lot. So there were two things going through my mind. Either I target this rejection block right here, since it's a very long wick, then I do like to target the rejection block. And I was not too sure on the higher time frame analysis. I was not too sure. It's rejecting a lot. I don't really like it. So the low hanging fruit for me would be these equal highs. I liked these equal highs, and that's what I wanted to target. So if I was going to target something, I would love to see these equal highs get taken. And again, we demanded a lot of a price. Right here, when price was here, I said, all right, if we do want to continue higher, and I like this rejection here from this wick, this is perfect because this is the rejection, of course, like we talk about a lot of the times. If price wants to continue higher, will likely wick right here and close above mean threshold of this, close above this fair value gap, perfect, push higher, and then continue higher. So then here we pushed higher. Now the first thing I wanted to see a close above these two up candles. And when we had a close above these two up candles, it was fine for me. I knew I was willing to enter. As soon as we closed above these two up candles, I knew, boom, that close, perfect, fine for me. I covered this breaker because now we basically already had displacement away from this breaker. We made a new swing low. And this is the thing. This is what I don't like. And you see me talk about it in a previous trade recap as well. I don't quite remember when it was. it was I think it was in here. I think it was in here. Yeah, it was in here. It was in here. It was Tuesday, 4th of April. So you can take a look at that one as well. That's where I took a trade, and it's basically the same scenario. It's where in Asia or late in the day, in the previous day, we already pushed away, and then you have to look for an entry in London, and it's like kind of like a retracement entry. And the thing I don't like, I would love to see London take these equal lows or the previous day low into a volume imbalance or fair value gap, and then displace. And I would love my entry to be here. Now here we already have our confirmation of our ST. We already have some confirmation of bullish order flow. So my entry can be a little bit more aggressive, but still giving it room to breathe and giving it room to reach a bit lower potentially, and not covering this swing low, but covering this breaker, because this is the confirmation for me. So here I can be a little bit more aggressive because we already have bullish order flow. Now, like I talked about as well, just because we had this push down doesn't mean order flow is now bearish. That's very important to understand, because same as we talked about, and watch the execution reviews, etc. Just because we have a push down or a push up doesn't mean order flow is bullish or bearish. That's not that important. Just a big push. We need to see a follow through. That's important. So as soon as this happened, as this candle closed, I knew, all right, I wanted to enter here. So obviously ahead of 3 a.m., we will likely see some sort of consolidation here, small consolidation. And at 3 a.m. will, if at 2 a.m. it's already done this, and at 3 a.m. we'll just push higher right here. And like I talked about as well, and this is something I noticed as well, I went over this in a Zoom call, I believe. Yeah, I went over this in a recorded Zoom, or in a Zoom call that I didn't record. Yes, perfect. So let me explain it again. If 2 a.m. pushes higher and 3 a.m. pushes higher as well, then it's very likely to get a reversal at 3:30 or 4 a.m. or something like that. So if both the volatility drivers are pushing price higher, then we'll likely see some reversal. Now, this is the same for equities open, etc. If, let's say, we have news at 8:30, so unemployment claims, and we push higher, and 9:30 equities open also pushes higher, then it's very likely, if you don't get any retracement in between, it's very likely that 9:30 will be some kind of retracement. Of course, in the right context, we can't just sell right here. We can't just call the top right here. This is not something we do, but this is something to take into account. And this is something you'll notice as well. Of course, again, in the right context, and of course, vice versa as well. If we pushed price lower without any retracement at 2 a.m. or 3 a.m., then we might have seen some retracement. So if it was opposite, let's say right here, 2 a.m. pushed price lower here, 3 a.m. also pushed price lower below this previous day low, and we were expecting higher prices, that will be a perfect opportunity for me to look at longs at 3 a.m. or 3:30 a.m. I mean 3:30 or 4 a.m. So that's perfect. And that's something you'll notice, etc. in your own pair. And this is why mastering one pair is very important, because you'll start to notice these kind of things. And these are things that it's very characteristic of DEX, and that's just something I noticed because I trade DEX mainly. So yeah, this was basically the trade. I was in, out, was pretty quick. Now, my psychology, like I mentioned, wasn't the greatest. I was a little bit doubting myself. Not necessarily doubting myself. I was just doubting price action. I was, let's say my high time frame analysis was 80%. I was 80% convinced of the direction, and 20% I was a little bit unsure. And that just got to my head a little bit. And I just obviously my take profits was here, and I was just like, all right, perfect. End of the day, that's my day done. in the morning, and I was like, perfect, that's it. And then afterwards we came lower. And once this drawn liquidity has been reached, and once I have my trade done, then I don't look for another entry. That's me done. That's just me done, and I'm done. I'm not touching it anymore until tomorrow. So yeah, and even if I didn't get my entry right here, so I didn't get my entry right here and would have swept this high, came down like this, I wouldn't have entered. If I miss my entry right here, I'm saying, all right, perfect, no problem. I'll come back tomorrow or whenever, and I'll see whatever happens then. We are right now in some sort of consolidation. Again, we are sweeping some stuff, displacing higher now, so we could reach for the highs. I'm not sure. If it stays like this without a clear 4-hour or daily discount array, then I will for sure stay out tomorrow. So yeah, I hope this was a little bit insightful. I hope it helped. And if you do have questions, then please let me know. All right, thank you.